President Donald Trump has ordered a federal review of how crypto firms access payment rails. This directive is part of a broader executive order from January 2025 titled Strengthening American Leadership in Digital Financial Technology. The review aims to assess how current regulations affect crypto businesses' ability to operate within the traditional financial system. Payment rails are the infrastructure that allows companies to move funds. For crypto exchanges, custodians, and stablecoin issuers, access to these systems determines whether customers can deposit fiat currency, withdraw proceeds, or settle trades in dollars. This is a critical issue because it affects the operational viability of crypto firms. Without access to banking services, even well-capitalized companies can face disruptions in treasury operations, customer onboarding, and liquidity management. The issue is not limited to large exchanges. Smaller crypto startups often struggle to open or maintain business bank accounts at all, a problem the industry has long described as debanking. Loss of payment rail access can effectively shut a company out of the regulated financial system. This concern has surfaced repeatedly in recent policy debates. The President's Working Group on Digital Asset Markets has already released recommendations addressing how federal policy should support, rather than restrict, lawful. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Digital asset businesses' access to banking services. Regulatory uncertainty around banking access has also raised questions about the broader implications for the crypto industry. The directive highlights the tension between digital asset innovation and traditional financial oversight. Crypto firms rely on partner banks and payment processors to bridge fiat and digital asset flows. Without reliable banking relationships, firms face operational risks that can undermine trust and liquidity. The federal review may lead to changes in how regulators approach crypto firms' access to traditional financial systems. If the review results in clearer guidelines or new regulatory frameworks, it could either ease or complicate the path for crypto businesses to operate within the existing financial infrastructure. The outcome of this review could influence how banks and financial institutions engage with crypto businesses in the future. The next signal to watch is whether the review leads to concrete regulatory actions or new executive directives that clarify the relationship between crypto firms and traditional banking systems. The stakes are high, as the availability of payment rail access determines whether crypto businesses can function at scale and maintain customer trust. If the review leads to a more supportive regulatory environment, it could help stabilize the crypto industry and encourage broader adoption. On the other hand, if the outcome reinforces barriers, it could stifle innovation and force businesses to seek alternative financial systems outside the U.S. banking framework. The review also has implications for how financial regulators coordinate across agencies. The directive touches on the roles of the Treasury Department, the Federal Reserve, and the Office of Financial Research, among others. These agencies will likely need to collaborate closely to ensure that any resulting policies are consistent and enforceable. Meanwhile, industry stakeholders are watching closely for any signals that could indicate a shift in regulatory tone. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Working Group's prior recommendations suggest a preference for a balanced approach that supports innovation while maintaining financial stability. Whether that balance will be reflected in the final outcome of the review remains to be seen. In the meantime, crypto firms are navigating a landscape where banking access is both a competitive advantage and a potential vulnerability. The ability to move funds seamlessly between fiat and digital systems is essential for customer retention and business growth. As the review unfolds, the industry will be keenly aware of how policy decisions shape the future of crypto access and the broader digital financial ecosystem.